Good morning, everybody. Welcome back to your weekly Southwest Florida real estate market update. My name is Braden Milner, founder of the Milner team here at Florida Future Realty. Just wanted to get into this for you guys, just our normal weekly updates. Um, sorry, apologies before we get into it for missing last week. I was a little bit out of it last week, but we're back. Going to be picking this up this week and continuing weeks in the future. So before we get into it, just want to go over the weather real quick. It's an absolutely beautiful day today. We're 82 degrees, phenomenal outside. We're starting to get that fall weather. We're definitely shifting away from, the 90-degree days in the summer. Today, they are saying the high is going to be 87. When you step outside, though, it feels great. We've got a nice breeze. We've got, just that nice fall air, not, crazy hot anymore like in the summertime. Sure, up north, a lot of you guys are starting to get that, crisp fall, winter weather. We're starting to feel it a tiny bit, but obviously being here in Southwest Florida, it's going to still be warm, still be great. We're not going to deal with any snow or any fun things like that. Just wanted to, go over that real quick with you guys, just so you can kind of see what's going on here in Southwest Florida. Next thing I want to go into, which we've been checking every single week, is going to be the mortgage rates. So we actually did recently this week see a drop in the mortgage rates pretty much all across the board, from 30-year fixed, 15-year fixed, VA, FHA, jumbos, variable rates as well. Check this 30-year chart. So we look to continually be dropping. We had basically about a month ago the priced in rate drops at the end of September. That was right here. So the market had kind of anticipated those. We got some mortgage rate drops in the middle of September down to the low sixes. They popped back a little bit into the low to mid sixes, and now we're starting to drop back. These are following the bond market. So today, this bond market is actually down pretty substantially. It's down about 2%, which is a good sign if you're looking to be getting a mortgage, if you're looking to be borrowing any kind of money soon. We are watching this chart right here. So, we're going to kind of see if we start to see this bond rate go down. That's going to be the mortgage rates are going to go down. People are starting to, see long-term growth and success and all that good stuff in America. They're willing to invest in, a government bond at a lower rate because they see long-term that the country is going to be doing good. So, if you're betting against the country, you want this to be going up. That means, investors are a little bit more weary. That means their interest rates are going to be higher. But as these are going down again, that means that people are feeling safer to invest in America. This is kind of the spread that the banks trade against as well. So they're looking at this bond rate. They're like, hey, we can go invest our money directly with the U.S. government, 100% safe at 4%, or we can go, give mortgages for 6.5% and make a spread. So that's basically, kind of how these bond numbers are factoring into the actual mortgage rate market. Again, so we're going to continue to watch this over the next couple weeks. Hopefully, we're going to continue to see a drop. Again, this was those last couple days there at the middle of September. So if we can continue to get a drop, past through here, we should start to see mortgage rates in the low sixes, high fives. So that's going to be really great if you guys are going to be getting financing anytime soon. Moving along to our regular stats, this is actually an interesting one this week. So we've been kind of seeing the median sales price go up, but the listings, pendings, and solds have been, kind of holding steady. So to me, that means that as we're starting to get here into this winter, into this fall market, just our normal season market, we're getting a lot of more northern buyers coming down, snowbirds, potentially their cash. They're just looking to, buy their retirement home. They're not super worried about it being the most, affordable thing in the world. They're just looking for hey, I really like this house. It's got a pool. It's got a canal. It's got all the things I'm looking for. I want to buy it. So that's definitely, based on these stats, the mortgage rates, and the prices, at least to me, it still seems like the average buyer is struggling a little bit just to, make things happen. But those, this median sales price going up definitely shows me that there are still buyers entering the market, and the buyers that are entering the market are going to be those higher luxury end buyers, snowbirds, second houses, people looking for pool access, golf access, waterfront, vacation homes, all that kind of good stuff. So we've definitely been seeing those people re-enter the market, which is a good sign. However, like I said, the regular closed sales and things haven't been continuing to go up the way that we want to. So this is this kind of range that we're going to want to pay attention to on the closed sales. If we start to drop any further in terms of, getting back to one of these lower levels where we're only closing 90 to 100, low 100 sales a week, not really a great market. Our inventory is going to go up. Our absorption rate is going to go up. All that kind of stuff's going to go up. It's definitely going to shift further towards a buyer's market than we already are. So if you're a seller, you're going to want to start to see these closed sales go up. You're going to want to see the inventory start to go down. And if you're a buyer, you're going to want to see these closed sales go down and the inventory to start to go up. So if you're a buyer right now looking at these closed sales, this is showing that, obviously, 135 sales closed last week, but that's way less than the 223 from the week before. So there's definitely seeming to be more sellers than there are buyers. So if you're a buyer right now, you want to continue to see this go down. That means you got more options, you got more negotiating power, all that good stuff. Again, if you're a seller, you want it reversed. You want there to be less listings and more sold price per square foot. So this is actually going to be an interesting one to check out as well. So again, as I had mentioned with the median sales price, this going up definitely to me signals that the people who are entering the market right now are going to be more vacation renter, snowbirds, second house buyers, luxury buyers, golf access buyers, pool buyers, those kind of things. We're not getting as much of those regular home buyers entering the market. They're still in the market, obviously, but the people who are going to be entering the market here soon are, like I said, second house, people that are retiring, people who are just like, hey, I've got money. I want to go ahead and just buy this house. It's got all the things I want. It's got all the things I need. Not worried about getting, the absolute best deal on the house. It doesn't have to make this, monthly payment. I don't have to, scramble for a down payment, anything like that. It's just, hey, I want the house. It makes sense. I like it. Let's go ahead and buy it. Percent of list price received. So this is going to be one that we've been checking out. This is interesting as well. So this is showing that the listings are actually becoming a little bit more well priced based on market value. So as you guys can see here at the end of September, we had dropped all the way down to 95%. Now we're back up to 96%, which means that buyers are getting about an average of a 4% discount off of listing price. So if listing price is 100%, average buyers paying about 96% price. So that's the last listing price. Again, list price is whatever the current price is, not the original price. Original price we're going to go over in a minute. But this is definitely showing me that sellers are getting a little bit more reasonable. They're starting to price more in line with the market. So as the buyers come in, there's not as much that they're having to ask for off. The prices are, where current market value is. Percent of original price received. This is going to be an interesting one as well. So as you guys can see here, the last couple weeks since the end of June, this has actually been trending up. So what this tells me is that sellers are getting a little bit smarter. They're starting to realize what the actual current market conditions are. They're realizing hey, we can't price, crazy out of line with the market. We're going to want to be in line, closer in line with current market values. So rather than listing crazy high and then having these big price reductions, they're just going ahead and listing closer to market value off of the beginning. Again, this is something that we're going to want to watch. If this starts to get a higher number, that means that less money is coming off of the listings, which means that we're in more of a balanced market. Sellers are going to have a little bit more power there, not have to drop prices as much, all that kind of good stuff. So if you're a seller, you're going to want to start to see this go up. You're going to want to see people starting to pay a higher percentage of the listing price. And if you're a buyer, you want to start to see this reverse. So that way you can get the most money off listing price as you possibly can. Percent closed above list price. This is kind of an interesting one as well. So this going up actually does show me that there are, still some financing buyers in the market. Typically with this closing above listing price, this can either be one of two things, either a really, really well-priced listing to where a bunch of activity gets created on the market, multiple offers, highest and best wins, or this can also be financing buyers who are potentially asking for a little bit more money on the purchase price to knock down their rate, get some closing costs paid for, get some kickbacks there at the end. So that could either be one of two things, like I said. But seeing this go up definitely shows that buyers, if they're finding a property that meets their needs, property that fits their criteria, there's still a percentage of them are going above listing price. Percentage of cash sales, this is something we're going to want to watch as well. So last couple weeks, this has been trending down a little bit. So we're definitely going to want to keep an eye on that. As the rates reduce, we should start to see more and more buyers feeling comfortable going ahead and getting financing as opposed to cash. If you're a seller, you're going to want to see these cash sales drop because that means that more regular buyers are entering the market. The average buyer who's getting financing is going to be more apt to see your house and purchase your house. If you're a buyer, you want these cash sales to go up. That means there's not as many average buyers in the market. It's mostly going to be investors, lowball offers, things like that. So you've got a little bit more negotiating power to compete with there. Days in escrow real quick. So this is just the average days that houses are actually sitting in the contract stage versus closing. So this being within this 30-day range is pretty normal. That's going to be about like the average timeline for a financing buyer. You're going to be probably 30-ish days or so, 21 to 30 days. Cash buyers can close quicker, but this definitely shows that like there's still a decent bit of people who are getting financing. There's still, a percentage of people who are having contingencies, other home selling, things like that when they're putting in offers. New listings is going to be a good one to check out. So 273. So this is down slightly from the 333 last week. Pending sales, this is going to be down slightly as well. So from 197 to 163. This is definitely something that we're going to want to keep an eye on. It seems like over the last couple weeks, for the most part, the pendings and the solds and the new listings are, for the most part, very relative with each other. So as you can see here, we had, an increase and then a drop in the new listings. We had an increase and a drop in the pending sales. And in the sold sales, closed sales, we had a very similar trend as well. So we had an up and then a down. So these actually, kind of corresponding with each other a little bit doesn't basically just means that we're in a balanced market. So they're shifting with each other. We're going to want to definitely pay attention to this over the next coming weeks. So if you're a seller, you're going to want to start to see that active inventory drop. You're going to want to see the pending sales go up, and you're going to want to see the sold sales go up. Just simple supply and demand kind of thing. So as you start to see less properties on the market, your listing's going to attract a lot more buyers. There's going to be more buyers on the market and less listings to compete against. If you're a buyer, you're going to want to see these pending sales go down. You're going to want to see the sold sales go down, and you're going to want to see the active inventory go up. That's going to give you the most options available, the most negotiating power, all of that good stuff. Like I said, over the last couple weeks, these have all been relatively working with each other. So that shows to me we're in a pretty balanced market right now, and we're kind of just, in limbo, waiting to see, which direction we break. Active inventory, total supply of active inventory is 4,485. So as you guys can see, over the past couple months, we've been steady decreasing. A lot of these were what we call phantom listings. I talk about this, pretty much every week, but a lot of people that listed their house for crazy prices that were, 2023 prices that we're not really going to get anymore. They were just kind of like, hey, if someone's willing to go ahead and overpay for my house, I'm willing to sell it. But these weren't people who were actually like needing to sell, having to sell, motivated to sell, anything like that. So most of these people over the course of the last couple months have came off the market. People who are still on the market now, people who need to sell, people who really want to sell, and actual, real sellers. Some of these too could have potentially been, pre-constructions, new constructions, things like that, maybe projects that got nixed. But now we're kind of back down to this normal level, 4,485 active listings on the market. We've got a lot of that ghost inventory gone away. Supply of inventory, this is going to be a good one we want to check out as well. So this is basically the number of weeks that it's going to take for all of the inventory on the market to sell. Last week, we were actually within a pretty good NAR balanced range of 20. This week, we're at 33.2, so we're slightly higher than what NAR's balanced range is. NAR would like us to be from like 20 to 30 supply of inventory. We're slightly higher than that right now. But as you guys can see, for the most part, since March, we've been right within this balanced market range. We've been favoring the upside of it. But as you can see here, the last couple weeks, August 30th, we dipped pretty low, and October 4th, we dipped pretty low. So this is definitely something that we're going to want to keep an eye out. But like I had mentioned before, with the pendings, actives, and sold, or pending, solds, and yeah, new listings coming to the market, everything seems to be pretty balanced. And that can, show here with us staying within that NAR balanced market range. Absorption rate is going to be the exact same thing as that balanced market range, except just backwards. This is just your odds to sell based off of all of the listings available in the market. So you've got a 3% chance to sell every single week. And then the pending inventory right here, this is the total amount of pending sales. So this is actually a good sign if you're a seller. So we're starting to see this pointing up rather than pointing down. So the active listings have been going down a little bit. The new listings have been going up, or no, new listings have been going down a little bit. Pending sales have been going up a little bit. So if you're a seller, you're going to have less competition and more buyers competing against your house. If you're a buyer, you're going to have, more competition with the other buyers. So you're going to want to start to see the pending inventory go down a little bit and the active inventory go up a little bit. Like I said, all of these have been pretty much for the most part operating very relative of each other within the last couple weeks. But definitely something that we're going to want to keep an eye on here for the future. Also going to be uploading for you guys a monthly update as well. I'm going to go over the October stats that will be up within the next couple weeks, and then I'm going to start to try and get right at the beginning of the month a market update for you guys as well. So if you guys like this video, had any questions, thank you all for tuning in to the live stream. If you have any questions about what this means for you, whether you're looking to buy, sell, invest here in the near future, my team's here around the clock to help you. Give us a call, 239-895-9383, or you can click any of the links down in the description below to view our website, book a call with me directly on my calendar. Whatever's easiest for you guys, but my team and I are here around the clock to help you. Buying, selling, investing in Southwest Florida, we're your go-to. So again, if you guys have any questions about what any of these stats mean for you, your situation, all that good stuff, give us a call, text, email, whatever.